Thank you for checking out crypto.chartguys.com, the source for technical analysis in the cryptocurrency world. We are proud to announce our own crypto alert system designed to give you the most critical technical trading information possible no matter where you are. Keep your eyes on the market with mobile or email alerts for MACD crosses, RSI levels, and even inside bar alerts for dozens of coins across multiple exchanges. New features and proprietary ChartGuys indicators are already in development. Our alert system is very easy to customize and utilize, so don't hesitate to sign up for the most effective crypto trading tool on the market at crypto.chartguys.com. Hey everyone, going to be doing a combined commodities video here. We're going to look at the dollar, oil, natural gas, and gold. We'll actually look at gold second. So starting it off with the dollar, and I'm going to start on all the weekly time frames so we can get the broader picture, the longer term thing, and longer term view, and then zoom into the daily chart and the 4 hour to get a little bit more detail. So where we're looking at the dollar and where we are coming from is very clearly in a downtrend on this weekly time frame, and it's a long-term downtrend that is spanning almost a year at this point. All 2017 was in a downtrend, and the bounce that we're seeing play out right now is a potential bear flag at this point. As long as we see this weak bounce comparative to the dump where we came from, and this last dump was up at $94, we're still well below that, I'm watching for potential weakness. That being said, we could see this bull MACD cross follow through and the bulls make their way up to the $91, $92 range. And why I want to look at this weekly chart is because if you look at the daily chart, it looks bullish just in the sense that the bulls have a little higher low and broke the lower high pattern on the daily. So they do have a little bit of bull momentum in their favor. And if you're looking at things just in the past month or two, it looks completely different than if you look at the weekly chart and zoom out and say, oh wow, this is just a really weak bounce attempt at this point, and we're going to do nothing to change this trend from where we stand right now. The last lower high, like I said, 94.22, and we are going to bounce, and wherever we top out, it will likely set a lower high compared to 94.22, and we'll have to see a higher low and a higher high for a more significant trend change. So where we stand right now, weak bounce playing out, but the bulls have a little bit of momentum. This is the support level I'm watching because this is the higher low on the daily time frame where we established support and then broke resistance. Resistance was back here at 90.57, but the support that must hold, 89.50. If we lose that level, the odds that the weekly chart is a bear flag will increase significantly. So the bulls really need to hold 89.50 this current week that's coming up, and the new resistance level is the top of this move at 90.93. So that's the range that I'm currently watching. If we break 89.50, there's not a whole lot of support until we get back down to the low of 88.25. And what this bounce has done is it has cooled off the hour or the daily RSI, and the weekly RSI has cooled off a bit from oversold as well. So if you've been watching commodities in the last couple months, you've noticed a very significant inverse correlation between the dollar and gold. And gold and oil were very inverse to the dollar together, but now oil is doing a little bit of its own thing with regards to the market. The market and oil are very strongly correlated, and the dollar and gold are very strongly inversely correlated. So checking in on gold on the weekly time frame, you can see that it's pretty much the inverse. It's a pullback. It's not a significant pullback considering the bull move that we made. It's a little bit of a lower high, lower low, not significant. And again, just comparing real quick, we had the dump and a little higher low, higher high. So we had a bull break and a little lower high, lower low. So essentially it's healthy consolidation at this point. The bulls are just looking to establish their weekly higher low. At this point, that's currently at 1302.68. We can round that to just 1300 psychological support that the bulls are trying to maintain. And the resistances, we got one up at 1361 and 1366, just doing a little bit of rounding for nice easy numbers. The daily chart is showing a clear little lower high, lower low pattern over the past couple of weeks, and we're going to have to see a higher low and a higher high to change that. So anything under 1341 will be just another lower high that the bulls are going to have to, again, bounce here, and we pull back, higher low, and a higher high will change the trend. Until that happens, the daily chart is favoring the bears, and we have to keep that in mind. Weekly chart for gold favors the bulls, daily chart favors the bears, and it's the exact opposite for the dollar. The dollar favors the bulls on the daily, and the bears on the weekly. So the first sign of weakness on the dollar, if we see that break of that daily support that I just pointed out, down here on the dollar at 89.50. If that level breaks, gold is very likely going to break this level of resistance at 1341. So those levels coincide with each other, and you can overlay these charts and watch the inverse action play out. Oil on the weekly time frame, if you've been watching the S&P 500, and I'll just pull it up here real quick to compare, but look how similar this correlation is. And this is the S&P 500 in the background and oil in the foreground here. And the S&P 500 pulled back more significantly. It's been a little bit more volatile, but it's essentially the same with the 2 big red weeks for the dump, 2 green weeks for the bounce, and then a red week this last week. So you can see that correlation is very clearly there. So we've been watching SPY and oil, and oftentimes, especially towards the end of the week, oil was giving us a little bit of early indication on what the market was going to do. A little bit of a heads up, sometimes as much as a 20-minute heads up. And also on the daily time frame, this higher low broke on oil on the daily chart before it broke on the S&P 500. So that was another indication of potential signals. So we do have lower wicks the last 2 days, Thursday and Friday. Bulls are buying the dip. We're seeing that in the market as well. Support right now is 60.17, that low. And because we broke the daily higher low pattern, we're going to be looking for a lower high to be set on the bounce. So even if the bulls do follow through to start this next week and confirm these reversal candlesticks, we will look for a lower high to form in the $62, $63 range. And from there, we'll watch for the potential of an equilibrium pattern to form. But right now, the most important levels on the daily chart, 60.17 and 64.21. There's a lot of space in between those levels, and we're going to be watching for a little bit of follow through to be heading towards the middle of this range. So that's what we're watching for on oil, the 4-hour time frame. Trying to change this trend around. The bounce right now is coming just off this little double bottom low. We still need to see a clear higher low and higher high on the 4-hour time frame with a bull MACD cross to be confident that the daily chart is going to get any follow through. Monday is going to be a pretty important day for the markets. I just put out a market video if you want to check that out. But the markets and oil, pretty important day on Monday in terms of whether or not the bulls can confirm the reversal candlestick. Natural gas hasn't been doing a whole lot. The weekly time frame is in a long-term equilibrium pattern that's going to give us a very clear break eventually. And we're going to patiently wait. And we have our high, a dump, low the dump, lower high, higher low. The range right now on the weekly time frame is very wide, so we can stay in this equilibrium pattern for another couple months. Support is 2565 and resistance is 2983. And I'm charting the futures here, NGJ 2018. So I am anticipating a lower high to form here. Could form anywhere in this range. It could form in the low 270s, could form in the low 280s. Have to be watching the daily chart to see if the bulls are keeping up momentum as we are, again, looking for this equilibrium pattern to play out for another couple months. The daily chart has been slow and steady, slow being the very key word. We're not seeing any kind of real strength, where after this pullback, we saw, let's see, 8 red days in a row, and it's now been multiple weeks, and we've only made back, we haven't even made back half of the dump to the downside. Just about half is where we're at right now. So it has taken 8 days to go down, and at this point, 2, 4, 6, 8, 10, 12, 14 days to make back half of that 8-day dump. So you can tell it's a weaker bounce comparative to the strength of the dump. So that definitely has us watching for the daily lower high to be set. The 4-hour time frame hasn't been very clear just in terms of some of these wicks are breaking support and then getting bought up and seeing the bulls maintain control. And right now, if we lose this level, this will have me increase my confidence that the lower high on the weekly time frame is being set, and that's 2642. If that level breaks, then this 4-hour time frame is going to lose this uptrend. Again, it's a slow and steady, fairly weak bounce that's playing out, and if we lose that level, that will be a bearish indication for me that the weekly chart is likely to head back down towards our recent lows. So those are the key levels that I'm watching. I'm honestly, personally not interested in natural gas until we either set a clear lower high on the weekly and we can make bearish position. Otherwise, I'm just going to wait for this equilibrium pattern to break sometime late, or I should say early spring, and that will give us a lot more clarity on the longer term trend direction. So that's where we stand. It's all about the dollar in terms of whether we can hold this daily high or low. And that's going to affect gold significantly. And as far as oil goes, the market correlation is certainly there. Hard to say whether oil is leading the market or the market's leading oil. I don't think it's that simple of an answer. But just this past week, the past couple days in the last week, maybe Wednesday, Thursday, Friday, oil has been leading SPY just a little bit. And again, that can give us some nice clues if we can recognize correlations and act on them. So I appreciate you tuning in, and we will see you throughout the rest of the week.